Guys, it is November the 16th and Wednesday. What a day. How exciting. I'm going to share my screen, but we are going to go through the two other retailers I got to listen to this morning, which is TJ Maxx and Target. And really then we're just going to kind of take questions from there. Past performance is not indicative of future returns. I'm going to share my screen and we won't really set up the day like we always do. Looking at it, this thing has been positive, negative, and then positive again. The Dow has been holding up a lot better than the other indices. Russell, NASDAQ, S&P, all really taking on the chin, as is crude oil. So, if we look at how this lays out, this really, it looks like people are done for the year and just basically repositioning a bit because there's no theme, there's no trend. Other than Target, who really took it on the chin this morning, there's really not much to say. There's no leadership in this marketplace. And even with energy down, how I feel about that, for lack of a better way to describe it. Pick any one of my episodes. This cannot last for too much longer. All right, let's actually go through and see what was going on with retail this morning. Economic data wise, there was a bunch of retail sales. I still have to get through all those numbers. But when it comes down to it, we had talked about the fact last week that there would be winners and true losers, and that it would be very, very much so anyone's guess on who got what piece of that, of the stick, so to speak. I don't know if there's a better way to say that. Target definitely was already kind of in trouble last quarter with its inventory issues, far more than Walmart was. Walmart's issue was more of a labor issue last quarter, and that subsided, which they told you would happen. And they didn't have any kind of extreme inventory issue. Plus, they benefited so hard from the food business. Somehow, despite the fact that Target does in fact sell food, and last quarter they discussed how the food business was really picking up over and above all the branded stuff that's in the place. They just couldn't make it work. I don't really understand. The way in which they couldn't make it work was something special. Here are their numbers. We had revenue up 3.4%, right? And then this cost of goods sold came in so crazy, such as you ended up with operating income down 49%. In fairness to all of the retailers, margins are skinny as they come for these businesses, because you really are distribution. Now, I want you to think about this. You've got, well, actually, we'll talk about it after I go through TJ Maxx, because I want to just continue going through this. Earnings down 52%. They talked about thievery in the store. They talked about so many different things, right? But it really is just a failure to manage inventory. And, I don't even want to hate on them that much, because COVID was so miserable. All they did was benefit from the fact that they were out of inventory, and everybody was out of inventory, so they could get pricing through in this beautiful way. And people were totally happy to pay up for it. What they didn't really talk about, which really, except in the very smallest of ways, was the idea that people were trading down to the cheaper choice, which is Walmart. As we know, Walmart certainly had a lot to say about that. Instead, they felt strongly that they were still doing great business on general merchandising. And in fairness, their sales number, that wasn't the problem. It really is operating margins. But I want to show you this. All right, if you're going to tell me the issue is you're still running down inventory, you can't very well have an inventory increase that's higher than almost everybody else. Okay, you just can't. I'm sorry. And some of this is FIFO. I get it. LIFO, counting, first in, last in, first out, all that stuff. So I get that. That's fine. It could be an accounting thing. I'm not 100% sure. There are people that are stronger at that than I am. But this kind of inventory number, I'll show you what TJ's Maxx looks like. This pretty aggressive uptick in inventory that doesn't really tell me. It's not so much more than everybody else, but it doesn't tell me that the issue is inventory and you've got it under control. They talked about the fact that they heavily discounted last quarter, but at the same time, they're still having issues with certain types of supply and certain types of areas. It was kind of a hot mess as far as the discussion went as to what's going on with inventory. And I would be really surprised, but maybe there's an analyst out there that's just better. I don't have a problem with that. I'd be really surprised if anybody bought the story on inventory as far as that goes. So yeah, that's not great for Target. Now, can they fix it the fourth quarter? we're going to figure out once and for all whether that stuff is coming off those ships or not, as relates to stuff that everybody cares to get for Christmas. And once that's sorted, Target scares me a little bit to be playing. I think there's better plays into holiday season. And I have really admired this CEO the entire time COVID has been there. He has not lost a lick almost in gross margin and operating margin at all. I mean, such a strong operator, this CEO. You got to give him full credit. It's a joy to listen to how he thinks about the business. But TJ Maxx has really proven its business model. And that is the fact that unlike a Walmart, even though Walmart had a great quarter fair and square, but unlike, they're kind of like a weird amalgamation of a general store like a TJ Maxx or like a Target or Walmart and an Amazon, such that even though they have inventory, they can switch it up and just work it out on the buying side. And that's just exactly what they did. I mean, this is even though they're flat on sales, they didn't give up profitability for it. And I kind of like that, to be fair. And then because they've been in a better financial situation, they did it off a lower share count on EPS, which I'm okay with on the third quarter. Now we're gonna have to watch him in the fourth quarter, but I'm pretty sure that he's going to do just fine on the fourth quarter, given the nature of what's going on in this world. And here, I want to show you an inventory just so you can see, this is a very small inventory uptick here. Given how much he's selling, so that you can kind of apples to apples, 12 billion in revenue versus about a double of that. So, it is a little bit higher for Target. So if they are actually, if the discounting is over, that's fine. But this environment, what we're seeing, people deciding to not necessarily brand up, but try to get the discounted price, the El Cheapo price. I get it. Listen, I like a sale. That's not an ideal setting if you're still discounting against your own products in the store. And with that, I will hit the pause button. Yeah, that's all I've got. I do want to, before I take questions, really talk about how this is set up within the general stores business, because Amazon, which we're always excited to talk about, is probably the bigger piece. Now, with Amazon, the cloud business slowed a bit. That's why I got penalized so heavily in the third quarter. We'll see what happens in the fourth quarter. But the retail business was not great. Unlike Walmart, which did show profitability on both the domestic and international front, we really didn't see that yet from Amazon. We certainly we saw a huge downtick from Target, which doesn't have much of a footprint internationally. And then with TJ Maxx, we're seeing them do okay, but not necessarily increase sales so much. So that leads me to believe, if we compare this to last holiday season, where things were actually going significantly better, this could be a very controversial fourth quarter. And in particular, what it really tells you is that, number one, people are totally trading down, like they want a sale. And TJ Maxx is an interesting one, because even though you'll get branded content, as they mentioned on the call, you're still getting it on sale significantly. So the way that all the choices are going is a particular way. Now, there are some retailers that will report almost immediately after Thanksgiving. And even though usually that kind of closes out the year, because we've got such oddities going on in this world, my suspicion is we're going to still want to see how to think about the whole setup for next year in the fourth quarter. So the fourth quarter for retail is going to be way more exciting than it typically is, which is just usually react to Christmas and move on. That's not how it's going to be this year coming up. It's going to be a very, very quarter to quarter activity. And with that, I'll hit the pause button on, I'll take questions.
Oh, hi, May. Yeah, very good. There was 400 million in thefts at Target.
Yeah.
That's huge.
It is a huge number. Look,
I don't see how that happens. Is people stealing from Target and selling it on Amazon? What are they stealing? What?
Anything.
Oh, okay.
But I just think, how? Do you know what I mean? Like, that wasn't remote.
Seems like some type of organized crime. That's a lot of stuff.
It's a lot of theft, but it's a lot of theft to pretend like it, like literally no other retail talked about it.
Right.
Think about it. If you're going to be a thief, would you rather steal the stuff out of Target, which, by the way, I get it. They had a lot of issues during COVID on that particular issue. Would you rather steal it out of TJ Maxx? Now, TJ Maxx is a smaller box, so maybe you can steal it as easily. And I don't know much about theft, to be honest. I'm as nerdy a kid as that can come. But like none of the other retailers had this conversation about theft. It is
Right.
such, the whole thing with Target was all awkward, and it was like the questions that were asked, they didn't make me feel, I mean, I'd love to hear what other people that listen to the call think. I wish there was more people that kind of did this, but then, whatever. But I'm listening to the call and I'm like, this theft thing, it's
It
only
seems
you,
like-
friends.
It seems like Walmart would be the first one to be risk, that would have a high theft risk.
Yeah, I don't get it. That's why I'm just like, I don't even know what to think about this. That sounds like,
Let's compare TJ Maxx to Target. I mean, I've never been in a TJ Maxx. Are they like Target, only smaller?
no, TJ Maxx is a discount store, but what they've done is they've increased their footprint for a lot of the size boxes. So, that's what the folks call it in retail. They call it a box, which is essentially their storefront. And so you got to fill the box with with all your merchandise in it. I know you probably know that, but maybe others don't. So the store footprint or the box for Target size has gotten a little bit bigger. So, if you live in New York, there was a TJ Maxx and then they went ahead and took the top floor. So now they have 3 floors instead of 2. And so TJ Maxx, the crazy thing with TJ Maxx is although their primary source was apparel, which they actually said they were doing great in apparel. Apparel is actually somehow magically, it's not true of anyone else, but apparel is actually bringing people into the store and they're selling it just fine. As is home goods, strangely enough, which no one expected that. In fact, one of the analysts asked them to clarify that. But the thing with TJ Maxx is they actually are doing really well in beauty. Every single category, because they get that excess inventory, if someone hasn't been able to sell it, they resell it off of a margin that they've pre-discussed, so to speak. So they're benefiting from any kind of remote inventory that someone wants to get rid of anywhere. So technically, even though they're considered via the GICS classification a discounter, but if you wanted to get shampoo at Target versus TJ Maxx, TJ Maxx will have the better brand at the same price.
Okay, so TJ Maxx is a little more of a boutique than Target, right?
You're just gonna have to go in, David.
Okay, I will.
You just have to go in, check it out. It's hard to explain. So not exactly. It's a discounter, and you can compare it to Ross stores because fair and square. You got to give the CEO of TJ Maxx love because Ross stores has been behind it. So it'll be very interesting to see if they were finally able to get in front of it at Ross stores. Because honestly, if I were to compare conference calls over the last 2 years, whereas Target was great for the first 2 years of COVID, they started crying a little bit these last 2 or 3 quarters. Ross stores has been crying about inventory the entire time. And then right when they thought they finally ordered enough, they ordered too much and had the same issues that Target had last quarter. So Ross stores, I may look to buy some puts there and just, with a little bit of extra to see what goes, because my goodness, 15% down. Now, in fairness, Target had farther to fall than Ross does, but both of them have the same issues both of them cried the same issues last quarter.
Yeah, I remember you mentioned TJ Maxx months ago. Now, how did he control his inventory better than Target?
It's crazy. Right out of COVID, the CEO of Ross Stores, I remember it was like 2 months out of COVID, everybody was scared that the market was going to fall out of bed. He was like, look, let me explain to you the nature of discounters. Okay. When things are bad, people want to discount. That's what we do. So what we're going to do is we're going to buy it at very aggressive prices because we know these retailers are against the ropes. Right. And if you'll recall at that time, Nordstrom's, everyone on down was all looking really scary because of the closures. And he's like, I got this. Right. So he goes, the first quarter, obviously we're all locked in a little bit. And he goes and he starts buying and sourcing, and he sources everywhere, and his buyers just crushed it. And every single quarter they were crushing it. They were figuring out ways to get it into the country via boats and stuff like that. I mean, it was just really impressive operation on his part. And then when the things got a little bit weak, I think the only even like half a hiccup, and it wasn't even enough to affect the number meaningfully, was that he underestimated. This is the only thing he did wrong in the last 2.5 years since COVID, 3 years, whatever you want to call it, right? he underestimated the freight charge as that went up like crazy, as oil went crazy, right? That's the only thing that he's even gotten remotely wrong. Everything else, it's like the man has a crystal ball. Okay. He's like really, really good. And because he never
You're
got
talking
behind,
about TJ Maxx, right?
or sorry, at TJ Maxx, right? It's like the man has a crystal ball. Like he never got so far behind on inventory that he had to do the catch-up game that Target and Ross Stores had to do.
Okay.
That's really, I think that's what it really comes down to, is that because in the first quarter of this year and the fourth quarter of last year, Target felt like it was just way massively under inventoried, that it just way over ordered. And then all that stuff came across the ocean a lot faster because of other slowdowns that were happening. It's a little bit crazy. The drop off that FedEx talked about early reporter in September hit these guys that hit Target like a rock. And my suspicion it'll also do so to Ross Stores. Let's see if there's some cheap puts. That might be fun. I literally just got off the call for Target though, so I don't have much prepared there.
Yeah, cool. Okay, we think interest rates have topped. So, I mean, does the market trade on the economy or does it trade on earnings?
It's such a crazy situation. I wish the years didn't close at the end of the quarter, because you've got you've got weird market dynamics. So we've got options expiring at the end of this week, plus earnings season is done, except for a few retailers that are probably going to come out immediately after the quarter. And then you've got a few people in December. And then we've got the first quarter of next year, and we've got fund managers in all kinds of spots. If you think interest rates are falling, I don't know if anyone's actually thought about what that implies to asset allocation. You know what I mean? So it is a crazy situation. Europe has been pretending like it's okay for a long time. I got news for you. Even if China alleviates in the US, it's kind of binary. If we continue, so we've got some escalation going on with China, right? And every other day is a different day. Okay. If we don't see not just de-escalation by China, but like some kind of end or some kind of bow tie on the Ukraine, if it stays flat, Europe's in trouble for the winter. If there are ways that we resolve our conflicts with China, but Europe still loses. And then the worst thing is if we escalate with China, Europe's screwed. If we go into a more aggressively bipolar stance with China, I don't see because everybody's gonna have to decide who you gonna play games with. So I am very worried about that for next year, and we will see. These next 2 months are going to be a nail biter into next year.
Okay, so I mean, there's really not any way we can project what earnings you're going to do in the first quarter of next year.
The first quarter, yeah, it's going to be very interesting. I mean, I think we get some like just pure, what do we expect on volatility? I could see volatility tapering or tamping down a bit, but man, once we turn, next quarter is going to be very, very controversial if the geopolitics escalates or stays steady through. I'm praying, look, more than the markets, I just want the world to be very calm, to be honest with you.
I think China's cool. I think they're cool.
Yeah, the real question is whether
I don't think they want any type of conflict.
Oh, China 100% does not want conflict, right? We've got our own special mess of politics that is doing all kinds of strange stuff over here, and that really does concern me.
If Ukraine, I mean, in my opinion, Ukraine is closer to the end than the beginning. So that could help.
Yeah. My understanding is there's some kind of China bill that the Republicans are trying to pass right now that would side the US with Taiwan, and then that would be a problem.
Wow. Okay.
I mean, I have to look into it a little bit further. Maybe that, I don't know. I get these really random emails, and it's so hard these days to tell what's just, oh, that's a delete versus like, oh, I have to investigate that further. The conspiracy theory was very obvious. You knew that person had something. Do you know a little bit that you might want to just ignore? Nowadays, this world has gotten crazy. You got to investigate every single one of them.
Right. Well, and seasonally speaking, you know, it's an up time of year. So,
It is.
and it's been up 100% of the time after midterms.
I mean, but for that one thing, this market definitely wants to rip. Do you know
Right.
what I mean? Like, I mean, you could just feel it. Yeah. And if if we get resolution, and even if it just stays neutral but doesn't get more antagonized in the fourth quarter, I mean, these corporations came in really, really strong. It's really
Yeah,
crazy.
and the economy is very strong. I mean,
Yeah,
the layoffs are 100% tech.
it is 100% tech. And
Who
even
are too fat anyway.
yeah, and even also with the tech layoffs, I'm not convinced a huge component of them can't just get almost an identical, if not greater income on the gig economy or as a consultant. So it is,
Okay, yeah.
yeah. And
Good.
then all of the rental companies out there, luxury and every single one of them, I mean, that I've listened to thus far. So in fairness, I think I've listened to 4 REITs, apartment REITs thus far. Every
Mhm.
single one of them is not having an issue getting rent. And everybody's been like, hey, so what about with the layoffs, all that stuff? They're like, yeah, not really experiencing a problem with that. Turns out people do other things for a living too, and we rent to those people too. So it is really a strong economy. I'm not going to make light of a bunch of people that are going to be taking some time off and a little freaked out probably going into the holidays, because what a crap time of year to announce it. But if we can just get
Those
over the
people,
hump of this.
they've been making 300 grand a year. I mean, sure, they've got a pretty big nest egg.
Yeah, hopefully. I mean, some of them are younger though and just graduated, so it's going to be like
Oh, I
traumatic.
see.
Yeah.
Right.
Yeah. And I had heard that a lot of senior professionals in these organizations were just like done. They were going to retire early. So hopefully there'll be enough of those to offset and give the young folks a little bit of a better holiday season. But
Okay, very cool. Thank you so much, me.
all right, take care, everybody. Stay healthy. Oh.